Good morning. I am super excited. We are here to do our financial makeover, and this webinar is clearly designed for those of you business owners and you're just unsure what it is you should be writing off on your taxes. So as we get going, let me make sure it is 8 o'clock on the dot. Please make sure that you have your favorite notepad. Please make sure that you have your favorite pen, you have a cup of coffee, water, tea, or your favorite soft drink, whatever it is, because we are going to dive deep in this next hour on what it takes to maximize your refund and minimize your tax liability. So let me go ahead. I'm going to set up my PowerPoint slide if you all don't mind, and we are going to get things going. So without further ado, let me do that really quickly. Please bear with me as I prepare for you all. You know, I was told never know silence, so just 1 second, you all. Oh my goodness. Okay, so we are going to get this baby moving. One second, you all. I know that there's 1 second. Okay, here we go. So, financial makeover, last minute tax tips. And that's what we're going to be going over today. So, oh my goodness, Cosette. All right, financial tax makeover, game-changing tax deductions. That's what we will be presenting today. Just so that you all know, White Tax Services is a division of My Financial Home, and I'll go into that in just a few seconds. So, some of you may be wondering, who exactly is Cosette M. White? Well, I am the CEO and founder of My Financial Home Enterprises. We are a nationwide consulting business specializing in wealth management. We have two divisions. We have our White Tax Services division, and we also have our small business division. I am a certified coach and an exceptional business communicator. I am the author of Smart Finances for Smart People, a book offering strategies and tactics to effectively manage your finances, even for those of you that live a crazy, crazy busy world. I have more than 20 years of experience in corporate America, from leadership roles. Yes, I started all the way from the dungeon as a staff accountant, and I worked my way up to the leadership roles where I was managing portfolios over $500 million. As a result of working with me, clients gain clarity with their finances. They learn to appreciate their money, and they learn to start developing wealth habits that leave a legacy for their families. So that's a little bit about who I am. In my free time, what am I doing? I'm spending time with my family, and we are typically out and about at games, doing things that most families do. Other than that, you can catch me working in my nonprofit organization, Achieving My Dreams Foundation, and that is where we give back to the community. We give graduating seniors scholarships as they head off to college. So that is a little bit about who I am, what I do, and so we're going to jump into this webinar. But if you all would just give me a moment, let me see what's going on with my PowerPoint slide. One quick second, okay? And I know. My sincere apologies. This was all set up and ready to go, but you know, things happen, and that's where we're at. So just give me a moment as I set this up. Hopefully everyone's having a fantastic morning and things are going well on your end, your side of the town. Um, Hopefully you have some things set and planned today. So here we go. Are you all ready? All right. So I've introduced myself. I've told you all what we're doing. Let me just share some other things with you. I am the author of Smart Finances, Smart for Smart People. And if you hang with me throughout this webinar, I have a free complimentary downloadable slide that I will be issuing, or ebook that I will be issuing to each of you that are on the call with me this morning. Also, a roadmap to retirement. That's also an ebook form, and I will be getting a copy of that to anyone who is listening to us live and you want a copy. I will have one available for you, as well as a guide to debt-free living. Also, I am the producer of 3 audios, Getting from Paycheck to Paycheck. And I love to say paycheck to paycheck because that is simply what it is. When we get paid, we're not going from paycheck to paycheck. We pay that rent, we pay that mortgage, we pay our utilities, we pay that car note, daycare, whatever, and then we're broke again. So why do we even say paycheck? It's really a paycheck unless you're depositing one of them throughout the month. I also have Wealth, Prosperity, and Abundance, which is truly, truly my baby. And through this audio, it's talking about affirmations, affirming what it is that we want in our life. What we think about, we bring about. So that's what the Wealth, Prosperity, and Abundance audio is all about. We also have Elevate Your Mindset and Your Net Worth. So, you know, it's talking about overcoming those roadblocks. And let me just piggyback for a second because I left some awesome news out. Wealth, Prosperity, and Abundance, just so you all know, there is a book that is currently being birthed, and I'm excited to say that the book will be launched in this late winter. So just be on the lookout for that, Wealth, Prosperity, and Abundance. All righty? So for today, our hashtag is Tax Talk 2015. Again, tag, hashtag Tax Talk 2015. And for those of you that have questions, your aha moments, or anything, the notes, you can just head on over to my Facebook page and put them in my Facebook page at My Financial Home. Again, My Financial Home is where you can put all of your aha moments, any juicy nuggets, and just share the tips with those that may not be registered for the webinar right now, but give them an opportunity to see that we are live and that they can hang out with us as well. And just so you know, you can take a moment and text your girlfriend, your friends, any of your business associates and say, hey, hop on this webinar. My Financial Home is doing a webinar on how to minimize your tax liability. Jump on the phone. All they need to do is go to www.myfinancialhome.com and hit on the tag that says live events, and they will be right in here with us. So some of you may be asking yourself, who is this presentation for? Who is a presentation for? This presentation is for anyone that wants to minimize their tax liability. It's for anyone who wants to maximize their refund and get back as much money from Uncle Sam and or the state, whatever state you reside in, get back the maximum amount. Now, this webinar is also for those of you who may be thinking, what forms should I be gathering? What is it that I even need as a business owner? This is my first year in business, or maybe you've been in business for a minute and you're still uncertain as to what forms you should be gathering, then this webinar is definitely for you. This webinar is for anyone who is concerned with how do I find a good accountant, CPA, or tax preparer? Because you just don't want to put your hands or your forms, your documents in the hands of anyone. You want to make sure that they're certified. You want to make sure that they're registered with the Internal Revenue Service, of course, and with their local agency if that is a requirement in your particular state. Okay? So here we are, and you're not sure what expenses that you can actually write off. We're going to be talking about what expenses can you legally, and I love the word legally, deduct as we talk about taxes, okay? So some of you may be asking, why is it that she even cares? Why is she really giving us this webinar? Well, I've been a tax preparer since 1991. Yes, I stepped out of the game just for a little bit while I was taking care of the children, but I care simply because I want each and every person on this call, and all taxpayers for that matter, to really understand what responsibility they have as a taxpayer and how the things that we put into our tax return, how it can impact us. Now, some people think, well, my tax preparer did it. She put those numbers in my return. That's great. That's fine. But guess what? You are ultimately responsible for what goes into your tax return. Now, some of you may say, why do you care? Because I've been through this for several years. I remember, and I'm going to share a current situation with you all, and that is I've sat before audits, Internal Revenue Service audits. I haven't had the opportunity to sit before any state audits, but I've sat before the Internal Revenue Service, not just on audits, but I've gone as far as sitting in front of the Internal Revenue Service representing individuals for criminal matters. Okay, it's no fun. And I really don't want to see any of my tax clients make it to sit in front of criminal investigation, the criminal department. That means that they've done something seriously fraudulent, and we don't want to get you there. So that's truly why I care. So my next question is, are you seriously ready? Hopefully you have your pen and your paper because we are about to get down to some serious business. So if you have questions, again, head on over to My Financial Home, and we're on Facebook, and I want you to put all your questions there, all of your aha moments, and make sure that you're sharing and you're paying it forward to your colleagues, your friends, or anyone that you know will benefit from this webinar as we continue. So let's start out with the main thing, the record keeping. If you are in business, you should be maintaining adequate records. And even if you're not in business, you still should be maintaining adequate records, because if you ever have a letter come to your mailbox from the Internal Revenue Service and it says, we need for you to call our office and schedule an appointment, that means that you're going through a full audit, okay? Not the letters that just come and say, please verify, or our records show this and you reported that. That's just, they're inquiring as to whether or not you reported income or expenses correctly. But if you get a letter and it says, I need for you to call our office and schedule an appointment with agent such and such, then that means that you're going through an audit. So accurate records are important. Accurate record keeping is important. Hopefully you have an account that is separate from your business. Those of you that are small business owners, it's critical. You need to have separate accounts for each business that you maintain. And that includes a separate account for your personal businesses or your personal matters as well. How long should you be maintaining records? If you hang with me throughout this webinar, I will be sharing some information towards the end of the call or the webinar. Just keep in mind, I can't talk about everything. So what I can't share on this webinar, I promise you, I will have supplemental information for you towards the end that you can take advantage of or that you can download for yourself, okay? But record keeping, you should be maintaining everything at least, at minimum, 3 years. The IRS can technically go back more than 3 years, but that is the norm, 3 years. If there's any fraudulent activity or they believe that you have underreported a significant amount of income, then they can go back further. So like I said, hang with me. I have a record retention guide that will be available to everyone on the call on the webinar this morning, and it will be available to you as well. Income. You should be reporting all income as a business owner. The rule of thumb is if you've generated any income of $400 or more, then you must file what we call a Schedule C. Excuse me. A Schedule C is a profit and loss. It's not a profit and loss. It shows your business income and expenses as a business owner. So that is what a Schedule C does. You'll have to report all of your income. You'll have to report, of course, all of your expenses. And that is also where we capture your inventory and we capture certain expenses if you work from home. There's a separate schedule that you must complete for business use expenses from the home, but it's all captured on your Schedule C. So make sure you are maintaining adequate records, once again, to capture all of your income. If you provide services for anyone, they are responsible for issuing you a 1099. You must report that income that you get from your 1099 on your tax return. And we're going to talk about the Schedule C specifically. That's where this would go. Okay? So let's talk about expenses. The favorite, the favorite, the favorite. I'm going to go down the line as if we were completing a Schedule C. So first off, we have our advertising. As you can see, that would include anything that generates profits for your business. So your internet, excuse me, not your internet, your website. If you have magnets that you put or decals that you put on your vehicle, anything that promotes your business in the form of processing or generating revenue for the future, that would fall into the category of advertising. All right. Some of you may think, well, I dumped a lot of money into advertising when I was starting up my business. Here's the rule on startup cost. You can write off up to $5,000 of startup cost the first year that you go into business. You cannot write up those startup costs if you have not physically went into business and you're not generating any profits for that business. If your startup costs exceed $5,000, then you have the opportunity to, to depreciate or expense those startup costs over a certain period for your business. Okay, so if in doubt, ask questions in My Financial Home and I can answer additional questions as it relates to startup costs, or make sure that you ask those questions to whomever is preparing your return. All right. Automobile expenses. Automobile expenses can be written off if you are a business owner, and there's two different methods that I want to share with you. The first method is actual expenditures, and the second method is mileage. So the first method, you're writing off all of your expenses as they pertain to your vehicle. And I will go a little deeper in a second, so hold tight. Keep all of your records. Make sure you're keeping track of when you take it to the automobile repair shop, they're going to write down the mileage. So that's important, and that's part of the mileage option that you have when we're talking about automobile expenses. But your windshield wipers, your tires, your registration for the vehicle, the repairs and maintenance, whatever expenses that you acquire or incur for your automobile, you're eligible to write those off. Here's the caveat. You can only write off a percentage. So that's why it's extremely important for you to keep track of the miles as it pertains to your business. So here's the deal. If you switch over and you take the mileage option, then that's all you're writing off is the mileage specifically for the business. You cannot write off mileage if you have a JOB and you also have your home-based business. You cannot write off the mileage from home to the JOB. But if you leave the JOB and you go to your business, then yes, you can write those expenses off. If you go to the post office, you want to track those. If you're delivering goods to your clients, you can track those. If you take a client out for entertainment or for some type of breakfast, lunch, or dinner, those miles you can definitely track. The mileage rate for 2015 is 57.5 cents. So you have to determine, or your accountant, CPA, needs to determine what's the best advantage for you. It may not be that the mileage is the best advantage for you. It may be that your actual expenses are the best advantage for you, depending on when you come in. There's more to this category. And again, I can't explain everything in this short period that we have together, although I would love to. So if you'd like to get additional information on the auto expenses, be sure to write me a note in My Financial Home on our page, on the Facebook page, My Financial Home, or hang tight. I do have additional information for you at the end that I want to share with everyone, okay? All right, commission. If you pay someone commission expense, you can definitely write that off. Professional and legal expenses. Most definitely you want to write those off. If you pay an attorney for any legal expenses, if you have a consultation with your financial planner, then you definitely want to write those off. Your tax preparation fees, you can write those off. However, if you're paying, let's just say $300 for your tax return, you can only write off the amount that is dedicated to your business. So for instance, what I do, I issue an itemized statement to my business owners so that they know what it is they're eligible to write off in the next year as they go and prepare their tax returns. All right. Depreciation. Depreciation, you definitely want to have a conversation with whomever is preparing your return. If you buy office equipment, you buy computers, you buy office furniture, all of those things can either be one or the other. You can write them off at the full value in the year in which the expense incurred, or you have the option of depreciating them over the life of the asset. Okay, so whether it's 3 years, 5 years, 7 years. I always say have this conversation with whomever is preparing your return because, of course, the goal is to minimize your tax liability. And if it's going to help you in further years or future years, then of course you want to depreciate it. If it's something that's going to help you for the current year, then of course your person who's preparing your return should have that discussion with you and allow you to make whatever is the best decision for you as a business owner. All righty. Rent. We definitely can write off rent. And for those of you that have an actual location where you operate your business, rent, you definitely want to take advantage of it. For those of you on the call and you operate your business from your home, you can write off the rent, you can write off the mortgage. However, we're not writing it off on Schedule C. You want to use the business use of home schedule for that. And of course, then it will roll into your Schedule C. All right. Repairs and maintenance. If you have any type of repairs and maintenance as it pertains to your business, you definitely want to write those off. Maybe you have a computer and maybe it broke. That's a repair. If you do any type of work, maybe on your office, maybe you painted in your office, maybe you got new carpet in your office, maybe you did whatever work you put, whatever work that you do. If it's a repair and it's maintenance, then you're eligible to write those off. All right. Office supplies. You're eligible to write off office supplies. However, if you use the business use of home, then you will not include office supplies into your tax return. And that's something that you want to make sure that you capture the expenses. But I always say maybe put an asterisk on that expense when you're turning it into your preparer, and just put a little note, or he or she should know if they are going to include the business use of home as an expense in the return. If so, then they know that they should not double dip and include the office supplies as well. Now, some of you may be saying, well, what does this category include? Office supplies, of course, as you see in the picture, for those of you that may just be walking around cleaning up and listening to me, or maybe you're in your car, but it includes the ink, the cartridge, pens, paper clips, staples, any supplies that you incur as a business owner and you need it to run your business. That is typically what we would put into this category. And let me just back up for a minute, because when we talk about business expenses, one thing that I want all of you on the call to just keep in mind, the IRS states that a business expense is anything that is necessary for the business. Now, what does necessary mean? That is an expense that is helpful and appropriate for whatever trade or business that you're in. The expense does not have to be indispensable to be considered necessary. So keep that in mind. In ordinary, what do they mean by the word or the term ordinary? An ordinary expense is one that is commonly accepted in your particular business. So just keep that in mind. The IRS does have a template that they use for each and every industry, and they narrow that down to specifically, say for instance, for tax preparers or accountants, CPAs. There's a template. They know what ordinary and necessary expenses that we should be incurring every year. They also know, say for instance, if you're a hairstylist, a barber, or a salon, they know typically what you all make as far as your annual income. They also know if you're underreporting, or maybe even if you are over-reporting. For those of you that have credit card swipe machines, they typically know, they don't typically, they know what transactions transpire or occur with those swipes. They know the activity. They don't get it. They get the detail. Excuse me. They get a summarized. They get a summary of it. But if they want to dive deep and get a detailed analysis of the swipes, the income, the returns, then they have that capability of getting that information should they need to in the event of an audit. So sorry to get off track for a minute, but just something that came to mind. Here we are, my favorite, travel, meals, and entertainment. Just for the record, this is one area that is typically audited. So it is to your advantage to make sure that you keep adequate records and you document in this area, because I can't tell you how many times this one little area has flagged individuals to get audited or to provide the IRS with additional information. So here's the rule of thumb on travel, meals, and entertainment. Of course, it is a tax write-off. All right, don't want to leave that out. But you can only write off up to 50% of the meals and entertainment. Okay, you can only write off 50%. The limitation or the exception to the rule where it exceeds 100% is if, say, you're taking your department out or your company out, your clients out, then you can write that entertainment off at 100%. But other than that, it's 50%. Travel, of course, is 100%. So let me give you some things that I want you to make sure that you're tracking when we talk about this particular area. On the meals, if you're taking someone out, I want for you to make sure that you get in the habit of documenting the who, what, why, when, and where. Who did you take out? Why did you take them out? What was the purpose of taking them out? And also, you want to make sure that you include whether it was just be very thorough. Be aware. You must include the time. You must include the purpose. You must include everything so that if you are asked to show the receipts or what the total amount of your meals were, say it was $500, just throwing out a lowball number, I want you to make sure that you have those receipts and you've documented them very clearly. The same holds true for entertainment. If you're taking your clients out to a basketball game, a football game, whatever social event that you're taking them out to, make sure that you document it. Document, document, document. I can't say that anymore. Document, document, document. Okay. Here's the deal, you all. If you're not documenting and the IRS, should the IRS audit you, they can choose to disallow all of the expenses that they're auditing. So if they're auditing this area and I don't know, you have $2,000 in this particular area, they can choose to disallow and say, well, we're not going to allow you to write off $2,000 worth of expenses on this return. So what that means is that you're going to end up owing the IRS because that's going to change your return. You're going to have penalties and you're going to have interest. So I can't stress it. Document, document, document. Utilities. Utilities are definitely a tax write-off. If you are a home-based business owners, you have a little advantage as well because you can write off all the utilities in your home. All right. And when we say utilities, light, gas, cable, internet, gardening, housekeeping, all of those things fall under the category of utilities. You just want to be extremely careful as to what and how, and you cannot write off 100%. You want to know why? Because you don't use your home 100% of your home, so you're allocating the expenses, and that allocation is based off of a square footage. So we're going to take the total square footage of your home, and we're also going to look at the square footage that you use specifically for your business. So let's just say your home is 2,000 square feet and you're using 1,000 square feet. That means that we're going to write off 50%, excuse me, you guys, excuse me, 50% of your utilities as it relates to the business. So here's the thing that I want you all to remember. When you are adding up your square footage for your home, make sure that you include the areas that are not used, say 100% of the time, but your clients are using that area. For those of you that may you see clients in your home, they come in, whatever area that is, make sure that you capture that. If you have inventory stored in your garage, your basement, if you have files, cabinets in that area, make sure that you include that area. Say your clients use the restroom, make sure you use that area. You want to maximize your square footage. So you definitely can write off utilities if you are a home-based business owner. Definitely if you own, you're renting or you're leasing a building, you can write those off at 100%. So make sure that you're capturing. That's when we talk about maximizing your refund and minimizing your tax liability, okay? Wages. If you pay anyone, you definitely can write off those wages. If you pay employer taxes, then yes, you can write those off. Now listen, you all, there is a difference between an employee and an independent contractor. Know the rules, know the games of the rule. If you don't know the games of the rule, then here's another area that the IRS can come in and ding you on. A lot of small business owners opt to go the independent contractor route instead of the employee route. Now, if you hang tight, once again, there's some literature that's available to you that will give you what's the difference between employee and an independent contractor. Here's the rule though. If you are paying someone as an independent contractor, you are responsible for issuing a 1099 at the end of each calendar year. So You are responsible come January 31st to issue a 1099 to that person. It must be postmarked. The rule is if you pay anything $600 or above, then you're responsible for issuing a 1099. Okay? And that can go for anyone, any contractor, anyone that you pay $600 or more, you can issue a 1099 to that individual. Those that you wouldn't be issuing 1099s to would be organizations that are, or corporations, let's just say they're a corporation. You don't need to issue those individuals a 1099. Okay? Miscellaneous expenses. A lot of miscellaneous expenses that we're going to go over, and in particularly, I want to talk about credits that are available not only to business owners, but to us as taxpayers in general. That's the earned income credit. And as a business owner, I very seldomly see those that fall into the earned income category. However, it could possibly happen. But I always say, as a business owner, we're in business to make money. So if we're falling into that earned income category, then we might want to beef up our services, our products, whatever it is, because we're in business to make money. And when we're talking about tax planning, I always say to my clients, it's not always a good thing, you all, to um, get a refund back from Uncle Sam. Depends on what your goals are. If you're looking to purchase a home, or if you're looking to finance or get capital or get funded at some point in the future, you want to show that your business has a profit. The underwriters look at those types of things. You don't always want to show a loss. You may want to show that you have a business and you're generating some income, you're generating some revenue. So that goes into tax planning. That goes into setting yourself up to pay those quarterly taxes. You know, talk to your tax professional. Let them know, hey, I want to show a profit. I want to show that I'm making money. Set me up so that I'm paying taxes every quarter. If you're not paying taxes every quarter, then I'm just going to say, have that conversation. And also hang tight, because at the end, once again, I have something for all of you, and it's going to teach you, talk to you about paying estimated taxes every single quarter, something that you should be doing. So earned income taxes, we have the child tax credit, we have the daycare credit, we have education credit. There's a lot of credits that are available for you or to us as tax preparers, but a lot of them do phase out at certain tax levels. So just have that conversation with whomever is preparing your taxes, okay? So I said to you at the end that I wanted to also go, let me talk about inventory real quick. Some of you maintain inventory. If you have products, then of course you're going to maintain inventory. This is critical on your return as well, because you need to make sure you know your beginning balance, whatever it is that you had on hand, and you want to know your ending balance, whatever you had on hand. So this is critical for those of you that maintain products. Come December 31st, or before you move any goods off of your shelf in the new year 2016, you want to make sure that you've scheduled your inventory count. Come something to have a discussion with now. If you haven't already had this discussion, you want to have this discussion. You want to begin to plan, because you need to know what your inventory is come December 31st or January 1st, what the ending balance is. If you don't have a system in place that will track that for you already, then you got to get out, you got to put a system in place. If you need assistance, reach out to me, reach out to the person that you go to for preparing your return on a regular basis. And no, nothing against this company that I'm about to say, but say those of you that maybe you've used H&R Block for years and maybe they don't offer that service. Maybe this is an opportunity for you to venture out and look at other professionals that offer the service for you, because you do need it, okay? So let me not continue on that, but we're going to move into my next thing, and that is, of course, what I've been asking all of you to hold on to your seats for. But before we do, I want all of you to head over to My Financial Home, and I want for you to just dump all of your questions there. You know, I can't see the questions now, but I want for each of you to get all of your questions addressed. So without further ado, I said that I had a special offer for all of you that have hung out with me on this webinar. And that special offer is my brand new small business scoreboard halftime adjustment CD. Yes, I love it. I put my heart and soul into this, and it's talking about game-changing tax solutions that will lead you to the goal post. All right, I know all of you want to make a touchdown. I know all of you want to score big. So I've put together this CD that will help you understand how you can minimize on Uncle Sam and maximize your tax liability. Now, I could not share everything that I needed to with each and every one of you in this small amount of time that we have. So I promised you that I had something for you at the end. So you may be wondering, is this CD really going to work for me? Is it going to provide me with all the information that I need to know to be a successful business owner and to get this in place? And I'm going to say absolutely. Yes, it will. So let me just share with you what are the next steps and how you can obtain your CD. All you need to do is head over to my website, and that website address is www.myfinancialhomes.com. www.myfinancialhome.com/products. Once you're there, you will see the information to the CD on my scoreboard, um, and you'll be able to purchase it there. Okay, so is there an investment? Most definitely there is an investment. So you want to know, what is it that you get in the CD? Well, let me go over everything that you get in the CD. I will be teaching you, and I will be talking in further detail about federal taxes and what it takes as a new business owner. What is your responsibility? What do you need to put in place? I'll go into detail, further detail on Schedule C. We talked about Schedule C today in briefly. Some of the matters we went a little deeper into, but on the CD, I'm going to take a deep dive, and I'm going to tell you what exactly you need to do as a business owner. I'll talk about the business forms that you need to use, the Schedule C, the business use of home, your depreciation schedule, and many, many more that you need as a business owner. All right. And some of you may be saying, well, I'm taking this over to my accountant, I'm throwing it in their hands. That's fine. That's great. We love it. But I like to educate my clients. I don't want you guys to feel like you just don't know where you're going and you throw everything into the hands of your professional. That's great. But you should understand what it takes to put that return together. You should understand what you can legally be able to write off, so that if you're going to someone and you're just unclear with what they're putting in your return, you want to be able to ask questions. Simply put, okay? So track number 4, for those of you that operate your business from your home, I'm going to be talking about home-based business expenses, what you can and what you cannot write off. Track number 5, I'm going to be talking about putting together retirement plans for your business, what you can write off and what you cannot write off, and how you can actually put together a plan. Federal taxes. I said this a few minutes ago. For those of you that are, you have employees, I want you to know what exactly is the difference between an employee and an independent contractor. Don't get caught, because that fee is very hefty, you all, if the IRS comes in and determine that you should have been categorizing your staff as employees versus an independent contractor. Don't get caught up. Don't. Okay, track number 7, payroll withholdings. What are you liable for? What's your responsibility? Payroll tax reporting. What's your responsibility as far as reporting the taxes, and how to hire people who live in the United States, however, they are not U.S. citizens. So there's 9 tracks that are available to you on this CD. And you may be saying, but wait. So I also have something else for you all. I love giving away bonuses. I love throwing things in. I have a tax and legal playbook guide. This is for everyone that's on the call and you get the CD. This bonus is available for you. It's going to talk about how to structure your business. Maybe you're a sole proprietor and you're wondering, should I become an LLC? Should I do S Corp? Should I do a C Corp? Then that's all in this guide. I talked about record retention. How long should I keep my cash receipts? How long should I keep invoices? How long should I keep canceled checks? How long should I keep my tax return? All of this is in my record retention guide. All of the business expenses that you're eligible to write off, not only are they in the CD, they're also available in this playbook guide that I have available for you. So what's the cost? Of course, there's investment. It's only $97. This is a huge, it's a small investment for a huge opportunity to be in the know. Maybe your person is not always available for you, but you will have 9 tracks that you can pop in, listen to anywhere you're at. It's not something that you download. You're going to get a physical package with 9 tracks in there so that you can take it with you. You can put it in the car. You can listen to it if you're traveling. You can put it on your iPad, your iPod, whatever you choose to do. And it's only $97. So again, this is what you get. You get the CD with 9 tracks, small business scoreboard, halftime adjustments, so that you can lead to the goal pole and get your touchdown. Also, you get the guide. So all you need to do is head over to myfinancialhome.com/products and you can order your CD today. It will be shipped immediately or within the next couple of business days. It will go out immediately, but within the next couple of business days, and you will have it for a lifetime. Okay? So my final thoughts to all of you. Don't get caught up owing the IRS unnecessary money that you don't have to pay. Know the game. Be able to get in there and change the game as we head into 2016 and as we end 2015. You know, it's important as business owners to know what you can and what you cannot write off. So before we wrap this up, I have a few more things that I want to share with all of you. Every day is a bank account. And the time is our and time is our currency. No one is rich, no one is poor. We've got 24 hours each, and that's by Christopher Rice. So, as you all know, in case you don't know and you need more information, I am at www.myfinancialhome.com. My office number is area code 805-983-1151. We are located in Oxnard. And just so you know, let me just have a conversation with all of you. One quick second. So yes, all of you, you can reach me at myfinancialhome.com. You can reach out to me. I'm always on Facebook. Put your questions in there. And if you've already placed questions in there, just know that I will go head over there today, right after the webinar, and answer any questions. But it is important for each and every one of you business owners on this webinar, and even if you're not a business owner, you're responsible for what's in that tax return. So the CD that I have for you, you know, maybe you're on the edge of your seats, or maybe you're thinking, let me talk to my spouse. Listen, a $97 investment, you know, we spend that easily every week just going out for lunch, for breakfast, for dinner. Invest in yourself. Invest in your business. It's key. It's critical. I can't say it anymore. It's 9 tracks. You will be happy that you took the $97 to invest in yourself. Head on over to myfinancialhome.com/products and order your CD today. I look forward to serving you. I service clients in all 50 states. I'm probably in about 22 states right now. and I would love to service you, whether it be for your tax return, your personal tax return, your business tax return, or maybe you need your books handled and someone to help you prepare your books on a regular basis. We do offer our CFO, Virtue CFO, for our business clients. That's where we do your monthly bookkeeping. It's important, you guys. Hopefully you are looking at a P&L on a regular basis every month. You know what's in your balance sheet. You have a flash report that you're looking at every day, and you are just a savvy business owner. That's what I love, my savvy business owners. And if you're not there, all you have to do is reach out to us and we'll help you get there. In the meantime, I thank you for spending this hour with me this morning. And I look forward to serving you in the future. I will head on over to my book, or my face page, or excuse me, my Facebook page, and address any questions that you all have left for me. In the meantime, you have an awesome and amazing day, and I will see you on our next webinar, same channel. In the meantime, peace.